All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I have a lot to do here this afternoon, so going to try to explain it the best I can, and go from there. We have a brand new signal on the board right now, and so I will be looking to make a new entry. But before we do that, we have some adjusting to do with GOLD as the 2019 profit level has been surpassed here today by about 30 cents here where it sits right now. So going to adjust this. Now, this is one where I kind of have a decision to make, right? Do I keep running it with the ATR method, right? We're now hitting it. We're hitting the price target now twice, right? So we've moved 4 ATRs. And so do I keep on running it? Do I take it? Do I just take it off and go, which we've done in the past when the challenge was at lower dollar amounts? Or do I, press the gas a little bit? So this is what I'm going to do. And before I do it, I'm going to explain what I'm going to do. But I'm going to pull off the 11 contracts that I have, right? I'm going to pull off the 11. And then I'm going to add 10 contracts of the 19 calls. Same date, same strike. So I'm going to pull off the 11. I'm going to add 10. So that's kind of how I'm going to roll it. All right. So essentially it is a roll, but the way the alerts are going to go out and the way that I'm actually going to execute it is selling one position, buying another position. And then we'll go take a look at how, assuming that it is still triggered, which it could lose its trigger here. It just rallied about 15 cents. So it could lose its trigger. So I'll double check it before we go and do it. So let's start off. Let's pull off GOLD. And I'm just going to do a market order here to get it off the board. 254 is my exit price. 254, so not too shabby there. And let me make sure the alert goes out. Okay. And so that is going to come in here, trade exit price 254, and that is 2:18 p.m. And that position is closed. Okay. So now I'm going to go buy gold again, right? 2:18 p.m. session. And I'm looking at the same strike, so the same month strike, but rolling it up $1 in the strike price. So the 19 calls and looking to do 10 contracts here of that. Now the price of the stock here, as I'm doing that, and let's make sure we get that is 2050. All right, so 2050. And then we'll go fill in the rest here after I make the trade. Right, so 10 contracts here, and market order on that, and confirm that, and boom, I am in at $1. Yeah, some at 169, some at 170, so I'm in at $1.70 there. So let me make sure the alert goes out on that for this entry. And that was 10 contracts of the 20th of March. Okay, 20th of March, 19 calls. Okay. So what did we do? We basically rolled the position. We pulled, we pulled what 2,800 out of it and put 1,700 back into it. All right, so that's essentially what we did there. Let's get things filled on out. Our new ATR on GOLD has increased. It's up to 51 cents here, so that will affect things, and so that's going to give us our new target price. Well, let me get the, there we go. That's going to give us our new exit level, just around $20, and our new target price at $21.52. So it rolls up the stop as well, and good to go there. Our auto exit date is going to be 3 days from today, so the 21st, so 2:21 p.m. session. And then our red date is going to be the, 25th? Yeah, 25th, so 2:25 p.m., and there we go. All right. And that position is open. There we go. So essentially, with GOLD, we are still in the position. Right, we're still in the original position. We're still in the original signal, running with it. We've just now had 2 roll-ups here with it, and what we put, originally into the trade, we did 15 contracts at almost $1. So we have more money in the position now than we did to start. But we have also pulled out just 1,900 in gains, just under 2,000 in gains, right? So it's been a nice little position for us, getting us close to 6,000 here for the challenge. Nice to be, and knock on wood, away from that, that slog we were in there between 3,500 and 4,500. So hopefully we're long gone from that. But anyway, that is GOLD and the GOLD position, and I'm going to run with that into the close here today, and then just kind of run it as as normal. Okay. All right. Now I am double checking here the scan and making sure Halliburton is still a put position here. Seeing what the consolidation risk. Let me show you the chart here while that's running real quick. But here's the HAL chart, and you can see the 3-day and the 7-day. They're no longer crossing down, and that is a concern. That's one of the reasons I'm running the scan again here. But it's really close. It's kind of a penny away here type thing. So my apologies for the delay there, just running the algorithm off of the screen. So I'll come back to that here in a moment. But if we look at just the crossovers that are out there today, on the upside we have nothing. On the downside we have a lot. And, I know the market's come back a lot and everything else, but this list is really long. American Airlines, Apple, Bank of America, COP, EOG, FCX, General Motors, HAL, IBM, Intel, JP Morgan. The only one that has a chance of triggering here is Halliburton, which is, unusual given the size of a list like this. But Halliburton is the one with the trigger or the potential trigger here on it. And again, I'm running that again here. All right. All right, let's go do it. We have a signal. It is signaling here. It is something where we could see a signal come in on it tomorrow morning as well if the stock rallies a little bit into the close and then falls tomorrow. Anyway, but it is a confirmed signal. So going to go out and trade some Halliburton puts, and I'm going to buy the March 20th. So just the regular March contracts here. And I'm going to buy the 22 puts here on it. Okay, and looking here for 15 contracts. Okay, so about $1,500 worth into it. Not overly aggressive here, and let's just hit market order and buy it. Okay. So $1.03 is the fill price there. So let me make sure the alert goes out. We'll get everything filled out. But $1.03 is the entry price on the Halliburton puts. So Halliburton for $1.03 on 15 contracts. And we have the 20th of March, 22 puts. All right. There we go. So 20th of March, 22 puts. Entry date 2:18 p.m. That is on Halliburton. And $1.03 is the entry price on 15 contracts. The stock price here is, let's see, $21.91. $21.91. and the ATR on this is 67 cents, 0.67. So that's going to give us our exit level and our profit level here. Now, I just have to switch around the equation here. There we go. There we go. So our stop's at 22.58 and our price target's at 20.57. And yeah, our current stock price here, now, not quite current, but you've heard the drill before. There we go. Auto exit date's going to be the same as with GOLD, right? So 2:21 p.m., 2:25 p.m. here, and off and rolling here at $1.03. Cash in. You could probably argue I went a little light on it. But that gives us, what, about $3,200 in cash in play here, and then about $3,200 in play, and then $2,500 for another position. So we have plenty of cash available for another position to go after should we get a trigger. So in on Halliburton, have made the change here to GOLD, and all the data is here and rolling. Okay. Alrighty. Give me just 2 seconds here. Just verify everything is good to go. I haven't gotten the thumbs up yet, so bear with me for just hopefully 5-10 seconds. All right, there we go. My apologies. So we're good to go. All right, we're good to go. All right, so that leaves us with our 9th trade for the challenge here, which leads us into a little 30-day summary here. And, I want to preface this with just this kind of challenge ending probabilities that we've looked at before. Go to 0. We have about a 10%. 1 in 10 challenges I expect to go to 0 operating in this fashion. 3K to 10K, about 20% of the time I expect to get into that area. 10K to 20K, about half of the time. That's where I expect most challenges to land. Just given the data, the historical data with the algorithm and running it, and then over 20K about 20% of the time here. Yeah, so that's the expectations here. Obviously, we want to hit 100K is the carrot there, and ultimately that is the ending point where we would end a challenge. But these are the destination zones that that I expect. Now, after 30 days, so this is after Friday, so this doesn't include any of today's data. After Friday, the challenge had just under 3,000 in cash and 1,900 in GOLD calls for a total of 48.42. So that's about a 60% gain for the challenge. And it's an interesting number because, any given trade can skew it, right? I never look at the exact numbers and go, well, it's this, so it means we can extrapolate it out or anything like that. Because when it comes to options, things are just very variable, right? The reality for this challenge is we started at 2,000, right? We the first 2 trades, boom, missile hits, boom, out. Okay, we're at $2,000 and running from $2,000, and so we grinded from $2,000 up to 4,800. So we got about a double and a half. And that is about the time period that I expect to get a double and a half. So in terms of performance, if you take those first 2 trades out, it's performed how I expect it to perform, right? The reality is, though, we can't take those 2 trades out. They are what they are, but, the challenge is built as it is to be able to overcome that, and it has overcome that, and, great, often rolling. The pace of the gains right now is not 100K, but it's about 10K. That's about the pace of gains right now. If we look at, hey, what has happened will continue to repeat. That's the pace that we're on, and that puts us in this 20%, 50%, that 70% area that I expect most challenges to land. We've had 8 trades. right? Now, this is only about 60% of the expected pace, right? I expect more trades over a 30-day trading period than 8, right? But when we look at the number of triggers, we've had significantly more triggers than I would ever expect to come in a 30-day period. 22 triggers is way too many and tells me I need to cut the watch list down, right? But when we hit January, and one of the reasons the watch list is like it is, when we hit January, the probability of this happening is just simply greater because it's a marathon earnings season. And so we have so many stocks reporting earnings. We have higher option values. And in so many cases, it's just not worth going after the specific option because of the values do not represent the risk-reward scenario that we're looking for the challenge. And that has been the case with a lot of stocks. There is one signal I just simply decided not to trade because of because of what it was and when it was, the EWZ, which triggered while the market was doing something different, and I just it wasn't going along with the metrics, so I decided, I'm not going to go with it. And ultimately that paid off, and that is something where, we talked the EWZ, EWW, EEM, they're on the watch list, but, when they trigger, only going to trade it if it's, a perfect setup here. But the other ones, it was option value or lack of funds, right? In some cases, it was lack of funds there for it. 3 out of our 8 trades have hit their initial price target, which is a little lower than the expected run rate, but with only 8 trades, I don't read too much into that. I expect somewhere between 55 and 60% to hit their initial price target. 2 out of 8 trades have hit their price stops, okay, which is about 25%, which is about the expected run rate. And then 3 out of 8 trades have hit their time stops, which is slightly higher than expected there. But again, we don't, with only 8 trades, I don't read too much into it because one trade alters the percentages in a big way. So it's just not a big enough pool yet to really say, hey, you know what, it's outperforming or it's underperforming or anything of that nature. Over the course of time, the SPX has gained 4.6% in the challenge time period, right? So the market has been off to a good start this year, 4.6%. But if you'll notice, where we've kind of made the best trades for the challenge and made money on the best trades for the challenge hasn't been when the market's been surging or dropping. It's kind of been in the flatter periods, which is interesting. Oftentimes I get told, the market's going up, we should have signals, or the market's going down, we should have signals, right? This idea that these signals are somehow based on the market. But as we've talked about before, it just simply isn't, right? It's based on individual stocks trending, and, not the mass whole of the market. We continue to see the data suggest that it doesn't really have much to do with the mass whole of the market. Now, this is the number that, is one that there's no way to get rid of it, right? It's a reality of an option trader. And it's the theta, or the time decay cost. And the theta here for the challenge has been $723, right? So $723. You think in 8 trades, right? $700. And that's about normal, right? This isn't super high. It's not super low. It's about a normal number. The normal number I would expect. But this is one part of option trading that people tend to forget about, right? Everyone knows, there's commissions. And I don't include commissions here because everybody has different prices and everything else. And it's just great. It's a matter of fact. It happens. And, we can go and calculate what those are at the end of a challenge. But this time decay cost, option traders never really see it, right? We never really see it here, but that's been the cost, right? So if we were to take out time decay, we're sitting up around 5,500, right? Of course, we can't take out time decay, so don't even try. But that is one of the biggest challenges that option traders have, is to not only get the direction right in terms of which way a stock's going to move, but overcome the time decay cost that are associated with it. And when you really sit down and calculate those, from an option trader standpoint, those time decay costs can get pretty pricey, and is something that something that there's really no way around. Right? There's really no way around. You can say, well, hold stocks, hold positions for less time. Well, great. Well, we could have sold gold after a day and said, it's not moving, so let's get rid of it so we're not, taking the time decay cost. And then, boom, off it goes, right? We're not, it's so marginal and so small relative to what we're looking for that it is simply a number that is calculated and looked at and made aware of rather than a number that any decisions are being made off of there. All right? So that's 30-day summary. We'll do this again after 60 days, and then we'll do it again after 90 days at the end of the challenge. But one thing I want to reiterate, and you hear me say this, a lot. It's a process, right? The challenge is not an event. Right? It's not an event. It's not something where it's a matter of taking a chart and going, ooh, okay, here's GOLD. What's it going to do tomorrow? Well, it's hit there, and the MFI is this, or the RSI is that, and the chart pattern is this, and the weekly looks like that. It's not a game of hyper analysis, right? It is not a game of, hey, what could happen. We know that there are millions of different scenarios that could happen, right? They're just incalculable, the number of different things that could happen with an individual stock and with an option position. So the challenge is about using an algorithm that has a high probability of finding trend, applying good risk reward options, and letting the process work, knowing that during the process, there are going to be the dollar generals, right, that are dumb and decide, hey, they want to consolidate and they want to pull back and then they want to go up and they want to consolidate for another 2 weeks and then go, right? And it's like, oh, man, I wish I was in Dollar General right now. I mean, it's off and going now. It's not about that, right? It's about, okay, do we have a signal? Great, we have a signal, go. And make that happen. And outside of that, letting the rest of the noise happen, because the market there's a lot of noise, and sometimes the noise is loudest on positions we exit, and sometimes the noise is softest on positions that we are in. Right, it was one of those things where on Friday, the GDX Gold Mining Index, I mean, it was negative by the end of the day. I mean, come on, we're holding gold when the gold miner index is negative? That doesn't make any sense. That's not, well, yes, it's just one of those where those noise factors are filtered out through the algorithm and through the ATR method and the process. And yeah, we're going to have times where it, performs very, very well. And perform strongly in our favor. We're going to have other times where, we end up getting knocked out of a Starbucks because of a fluke thing, and then, boom, off it goes, right? And those are going to continue to happen, right? Those, can't take those out. Just simply cannot take those out unless we go and play the guessing game, and then we'll be right sometimes, we'll be wrong other times, and we'll be in the same position. And so as you look at the data, right, my bottom line here is as you look at the data, as you look at the process, right, understand or take into account here how much noise is filtered out, how much noise is disregarded, how much noise in the market just doesn't matter. And yeah, could we optimize something a little bit more? Sure. Could we have held Starbucks? Sure. But then again, we could have held Disney and gone to zero, right? So it's one of those where, going to continue to run with the process, not going to change the process, and unless we see things that, statistically are better, right? But have to see things that are statistically better that isn't back testing, right? Back testing is not very legitimate when it comes to this type of process because we can't, take into account all the option pricing and, the risk reward scenarios in the options at those times. And so, back testing, yeah, we can get a feel for stock direction and things like that, but we can't get a feel for option pricing and applying the challenge to the to the algorithm. So, we continue to test different stocks and continue to play with different stocks, that will ultimately land on the watch list in the future. But all that's in real time, and this isn't about back testing and go. This is about, hey, is it something that's working in real time, knowing that, yeah, we'll have a challenge that goes to zero. I think the last challenge we went from 3,000 to 2,000, and it stunk. It was a drag. The challenge before that, we went from 3,000 to 10,000. Okay, great. Now we're 3,000, getting close to 6. All right, we'll see where we land. We still got plenty of time, and we'll run from there. All right. Thanks for hopping on. Thanks for being with us here at Trader Minute. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.